Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right. No extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Anmol Singh. Anmol is a trader and investor and author of Preparing for Success. Anmol knows all about riding the emotional roller coaster of the stock market. The difference between profit and loss often comes down to understanding how to make logical, fast decisions based off of consistently changing data. Anmol and his team at LiveTraders show people how to execute trades, review different scenarios, and most importantly, keep their emotions in check when the stakes are high. Anmol has been trading since his college dorm days, where he saved enough money to legally start multiple franchises, moved to America, and by age 22, had done all of that. In addition, you may have seen him on various media outlets such as Business Insiders, Forbes, and International Business Times. Anmol, I'm looking forward to this and kind of a timely episode here with all this craziness in the market here over the last couple of days.
I know. Likewise, looking forward to chatting with you as well. And you're right. It's the time right now for investing for sure.
For sure. And so what if we could maybe start first with your background, where were you, tell us a little bit about where you're born and what eventually led you to investing, in this case, in the markets.
Yeah, definitely. I mean, this was the last thing I thought I'd ever do. I was born in India, lived there till I was like 17 years old, born and raised. And a lot of that, I was horrible at math. So the last thing I ever thought I would be doing is something to do with numbers or with the stock market. And I never thought that even as a possibility for me. I always wanted to just get a regular job, create some stability in my life because I grew up in an entrepreneurial family, but I saw the ups and downs and I was kind of against that. I was like, I just want a nice little paycheck, keep my life simple, don't have to deal with all the headache that I saw my dad go through building a business. But what happened was I went to college in London, went to university there. And at the end of that, we were, I think about the second year of university, you have to apply for like internships and jobs and things of that nature before you can graduate. So I did that and I didn't get a single call back. I got a lot of interviews, but I couldn't really get in anywhere, didn't get a job. And I think that's when it dawned on me that I can't just sit here and rely on other people to give me a job, right? I can't rely on them for my financial future. And I think I was in my dorm room just really curious about the stock market. And I was a typical introvert, so I would be happy to just, while other people are out there partying, I would be in my dorm room reading books on this subject, watching everything I can get my hands on. And I became like really fascinated and curious with it. So my journey started in college. I started the Trading and Investing Society Club in college, which now, many years later is still a thriving club. And I started that to just be a bunch of guys meet up once a week, talk about the stock market, what we learn, share ideas. And that's kind of the initial seeds were planted. And and then I just started trading for a proprietary trading firm in New York City while I was still in my dorm room. So they hired me, started working for them, was trading their money while I was still in the dorm. And they would take a percentage of everything that I made. So I kind of worked my way up. By the time I graduated, I was already one of the successful traders at the company.
That's awesome. So what do you think led you to be able to kind of follow the market? Obviously, everybody's experience with the stock market is different. I mean, some folks, it's just you join a company, you have a 401k, and they may give you a short list of, stocks to pick, and that's about all your extent of it. And other people have opened up, whether it be like myself, an E-Trade account, and just you think you're picking the right stocks. Maybe you're, looking at some guidance from some outside sources, but half the time by the time it makes it into those things, it's kind of old news in some respects. So what was it about what you did that you feel like made you successful in the beginning, and then obviously since then you've continued on with that success?
Yeah, I think the word that comes to mind is curiosity. I think a lot of people come to the stock market for the wrong reasons. They want to get rich quick, or they want to have this next big trade, and they come in it for the money, which is fine. We all come for the money. But like for me, it was like the curiosity. I was just curious about, why do the markets work the way they do? What causes the price to go up and down? Who decides that? Like, I just wanted to learn everything. So for me, it was like more like an intellectual exercise where I wasn't even focused on making money. And I think what really helped me was I was in college, in dorm room. You don't have any expenses. So I could, trade a whole year without making money, and I'd be okay with that. For me, it was just about, I want to learn, why do these things happen, right? And I think a lot of people, as you said, rely on outside counsel, like, online articles they might read on things of that nature. And I always tell them, never trust anything you read online, because it's probably written by a college student, right, who doesn't know what he's doing. Because I did the same thing. I used to write articles for Yahoo Finance and all of that. They used to pay me like a freelancer, like $1,000 or whatever for an article, for a research report. And I would do that. I was still in college. But people read that and they would go on those advice. And I'm like, yeah, I'm sharing all the things, but I'm still a college student, right? So I think be careful what you read online, because it's probably written like a college student like me. So I think for me, it was like curiosity, wanting to learn, like what causes that, like really understanding the market dynamics, right? Why is it that sometimes companies report great earnings, but the stock still goes down, right? Why is it some companies report horrible earnings, the stock keeps going up? So it's not the fundamentals, or it's not really that causes that. It's all the price action. So my approach is very statistical based, just like a casino, right? You could go to a casino and you could win a huge amount, right? A casino's not going to mind. They're going to give you that money because they know the longer you play, eventually they're going to come out ahead. So they'd give you free drinks. Keep playing, because they know that they have this statistical edge in the long run that's going to work. So that's kind of what I do with my own trading investing. I have models. I've tested it. I know what my edge is. So it's not even about a particular trade or investment, whether that makes money or lost money. I know at the end of like 50 of them, right? It's a big enough sample size. This is the percentage that I'm going to come out ahead. So I built a very technical approach, which I don't care about the company. I don't care what the company does. I don't care what the CEO looks like, what the balance sheet looks like. It's all statistical based approach.
Okay. And so if you're not really so focused on that side of it, what are some of the reasons that a company like that will come up on your radar? Is it the trading volume, or what is it that kind of, out of all the stocks that are out there, that kind of has you put those in your crosshairs?
Yeah, so a lot of the strategies that I use are based on technical chart patterns. So once the chart pattern sets up, then that's going to be an example of an idea we're going to look at. So an example would be, let's say there's a stock and you see, okay, every time it touches $200 a share, it comes down, right? It keeps failing at 200. It just can't get above it. So then I know that, okay, once it does get above 200, now that was the ceiling at one point, kept getting rejected at 200. But once it breaks 200, what happens is that ceiling ends up becoming the floor, right? And then that's where we look to buy it. So if a stock hasn't gotten above 200 for, let's say, a year, it finally gets above it, then we know, okay, now it's probably going to go to 250 once it's finally above that 200 level. Once the supply, as we call, is absorbed, then the buyers take control. So that's an example of a pattern. The other example is, we notice, okay, let's say Tesla, for example, last year, went down from $400 a share down to 120. And it came down perfectly into a level where, statistically is held in the past. And it was also like in an uptrend. So that pullback was just a pullback in a larger uptrend. So then that's an example of a pattern we'd use. So we have a lot of different strategies that we've created like that we've tested over large enough sample size that we know that, okay, long term, this is a viable strategy that's going to make money in the long run. So we just simply execute on that. So there's many different technical patterns we look at. And we also try to sort of do the opposite of what people are trying to do. Like, a few months ago, everybody wanted to buy Tesla when it's at $400 a share. And that's the time where, at least for me and my company, we were selling it, right? And now it's coming back down again. And now we're like, okay, now it's time to buy it back. So we try to usually do the opposite of people because people always buy around the top and they sell around the bottom. And we're just kind of flipping the script and, trying to buy it on the way down and then sell it on the way up. So in our industry, we call it feed the ducks. When everybody wants to buy the stock, feed the ducks, right? We start selling it.
Right.
And when nobody wants it, then that's when we start buying it. And that's what really buy low, sell high really means.
Okay. And on some of these patterns and stuff, obviously, there's so much awesome software and stuff out there now that, you can pull back a lot of different history. You can see some of that stuff. But are you using anything, utilizing, is there a particular type of software that you're using to maybe see those historical patterns or to recognize that across a portfolio of various stocks or, how, I guess, in other words, give us some of your insight on, kind of what you're looking at there that's helping you beat
Definitely.
the market.
So I don't use any fancy softwares. We just use basic charting software. Now, most brokerage platforms already have this built in. You have access to charts and you can always look it up. Every single broker has that. But for what I use is a website called tradingview.com. No affiliation with them, but there's just a charting software that gives you access to all the stocks charts. And you can go back and, zoom out and take a look at it from its 1970s to what it's done. So it helps us build a picture of that. So I'm using it's called candlestick charts. I use that on websites like TradingView, and then I actually trade on my broker, which is interactivebrokers.com, and I trade on them, and I put my trades on that execution platform. Now, with the charts, we have certain patterns as we talk about, and we're just looking for those patterns to set up. But there's no software. I manually go through them every day, right? All of my stocks that are in my list, and I try to find those patterns in them. Now, the market has like tens of thousands of stocks, and that's I think the question people have is, okay, which one do I focus on? Right. So I always tell people, okay, build a list of stocks that you actually like. Let's say you love Tesla, whatever companies you love, right? Just you think these are great companies, build a list. You might come up with 20 or 30 of them. Now that becomes what's known as our watch list. And then I go through them every day. And all I'm doing is I'm waiting for one of those patterns that I talked about to set up. Or if there's no pattern, I don't trade it. I pass on it and move on to the next stock. Right. So sometimes a lot of the trading investing game is waiting. Sometimes the best thing to do is nothing. Sometimes we just wait. We're waiting. Okay, I would love to buy Tesla 200 again. It's almost there. It's 220, 230. I'm not going to buy it. 200 is the level. So we just wait for a lot of those patterns to set up. And a lot of the trading game is actually a waiting game. The professional traders most of the time are just watching and observing and waiting for stocks to come to their price levels that they want to buy it at. And when it finally comes there, there's no decision fatigue or there's no decision to make because you already decided that beforehand. So I think a lot of those approaches we use, and the key is actually risk management, because the biggest reason people get hurt in trading investing is they don't manage their risk. They love something. I'm going to buy GameStop. I'm going to buy AMC. I'm going to put all my money in there. Not a good approach. So we take a series of trades because it's never about making money on that one particular trade. It's about a sample size. If I take 20 of them, all right. Because here's a great approach to use. Let's say all of my winners are twice the size of my losing trades. So let's say every losing trade I take, let's say I lose $1,000. But if every winning trade, I put a target of, let's say, making $2,000, now my ratio is 2-to-1. So by that ratio, I only need to be right 34% of the time to break even and to make money. So I could take 100 trades. I could lose on 60 of them. But as long as I just win 40 of them, by that ratio of 2-to-1, I'm going to make profits. It's all about statistics. It's making sure your winners are larger than your losers. So it's not about winning more. It's about making more on the winning trades and losing less on the losing trades. And by that ratio, if all your winners are twice the size of your losers, you win 40% of the time, you're going to make money. Now, professional traders, we're going to be right more, 50, 60% of the time. And I think that's kind of the number. But a good rule of thumb is to realize nobody wins all the time. There's not a single trader on earth that wins 100% of the time. You might have great months where I might win 90, 95% of the time. But in the longer time frame, it's going to be about that 60%. But again, with that ratio, that's a great way to trade or invest.
Yeah, for sure. No, that makes a lot of sense. So you're not looking at the entire market by itself. You're saying, hey, look, these are companies that I like, that I either have an interest in, or for whatever reason. Then you're kind of just focused on those particular ones, and you've kind of charted those out. You've done your research, and now you're, basically saying, hey, are these going to hit where they need to hit? So like in a typical day, and maybe yesterday and today maybe are not typical days, but in the typical day, how many trades are you making, or is it even on a daily basis? Is it on a weekly basis, that kind of thing?
Yeah. So my trading is divided into like 3 buckets, right? So actually 2 buckets, but 3 different styles. So the first bucket is what I call the income producing style, right? The goal of that is to make an income, to live off it, to pay your bills, right? Because if I have an investment for like 3-4 years, that's not going to pay my bills, right? So then we do short-term trading. So income producing style is what's known as day trading, where I'm day trading every single day. I'm taking typically 2 to 4 trades a day, right, that I'm taking. And the goal is to make a monthly income off that, right, to pay my bills, to live off it. Then the other bucket I called is the wealth building bucket. Now, in the wealth building bucket, there's going to be longer term trades. Something maybe I buy today, maybe I sell it next month. Maybe I buy it today, I sell it next week. And maybe sometimes there's, trades. Now in the wealth building bucket, there's 2 styles. One of them is swing trading, which I just mentioned, which is you buy something today, might sell it next week, buy it today, sell it tomorrow. And then the other bucket in the wealth building style is core trading. Core trading is the same as investing, it's just not based on fundamentals, it's based on technical charts. And those investments or trades, I might be in it for a year, 2 years, 3 years. So divided into those 3 buckets. So the income producing takes care of my daily livelihood, pay my bills, live off it, generate an income. And then I take a percentage of everything I make from that, and then I put it in my wealth building bucket that it gets invested for the long haul.
Okay. No, I think that's an interesting approach. And so what are some of the other things that maybe somebody kind of from the outside looking in doesn't always, in your opinion, catch as far as what they should be doing within the market?
Yeah, I think it all comes down to having a plan. Like just like you wouldn't start a business without a business plan, you should not come into the markets without a trading or investing plan. I think a lot of people, the reason why they don't succeed in the markets is because, to be frank, they're just winging it, right? They're winging it. They read something online, they read something on Twitter or Reddit. They're like, oh, this is the next big thing. And now they're just trading on hope, right? I think this is going to go up. So they're trading on gut feel. But what really is gut feel? Gut feel is basically our experience telling us, hey, you've seen this before, look at this, right? But if you're not experienced, there is no gut feel, right? So a lot of people come to the market and I feel the stock is going to do that. I'm like, based on what, right? Based on what? It's just based on nothing. It's something you read online. That article's probably, written by a college student, number one. It's probably published a few months ago. Thousands of people have read it. So what's the edge that you really have? So just like a business plan, you need to have what's the unique selling proposition? What's your unique thing that that other competitors don't? Same thing with trading. What is that that other people probably don't? Because if it's an article, everybody's read it. What's the edge that you really have? So I think creating a trading investing plan is the number one key. But the number 2 is risk management, right? As we talked about, not losing more than 1 or 2% on any given position, right? I think a lot of people end up putting a lot of their eggs in that one basket. And then if that basket doesn't work, then now they're in trouble. So I don't want to take a hope-based approach on my trading. I hope this is going to go up. There's no hope. Hope is not a strategy. The strategy for us is like, we know exact numbers. What's the win-loss ratio of the strategy, right? What's the win percentage? And based on that, we can create models that are proven to work in the long run. So number one thing advice I'd give people is that, A, you don't have a gut feel, number one, right? Gut feel is built through experience. Number 2, there's no edge in reading stuff online and buying it, right? Number 3 is you have to have proper risk and money management. Make sure you're not putting all your eggs in one stock or hoping this is going to be the next big thing that like a lot of people do with crypto, right? Is not just hoping, making it a part of a strategy. Sure, I have crypto too, but that's going to be a percentage of my overall bucket, right? I think that's the approaches people need to have.
Yeah, makes sense. What about, are you doing anything as far as like options or setting up any kind of, when you put in a trade, like where it'll sell automatically? I don't know the terminology, but and you can help us out with that. But how are you doing your trades? Is there anything automatic that's happening at a certain price point?
Yeah. So before I take any trade, the first thing I decide is, okay, when am I going to get out if I'm wrong? That's the first thing. Before I even think about how much money I'm going to make or if the stock's going to go up, first thing before I even take it. A lot of people do it after, right? Before I take the trade, I need to know where I'm going to get out if I'm wrong. So that's how we use to calculate our risk level. So example, let's say I buy a stock at, $100 a share. And I see, okay, if it breaks 99, it seems to hold 99 really well. But if it breaks 99, I should not be in it. So then I know, okay, if I'm buying it at 100, if it goes below 99, I'm going to get out. So I'm risking $1 per share. So now if I decide my personal risk tolerance is $10,000, I don't want to lose more than that. Well, then I know I have $1, right? Stop loss level is what we call it. So then I only need to buy 10,000 shares. Because now if I buy 10,000 shares and if it goes down to 99, I get out automatically, I lose exactly what I planned on losing, which is $10,000. So there's no uncertainty now. So now I don't have to figure out what am I going to lose, what's my risk on the trade. I've already pre-decided that. And then if I don't want to risk $10,000, let's say I want to only risk $1,000, well, now I know I buy 1,000 shares. So then my risk is control. So there's no surprises in my trading. I know exactly what I'm going to lose. And if it goes down to that level, I'm not thinking, like a lot of people do this. That goes down to, let's say 99, they think like, I think it's going to come back up. I'm just going to keep holding. Let me buy more. Let me lower my average price. Maybe it'll come back up. That's all gambling in my opinion. When it hits the price that I said I'm going to get out at, automatically I put it in my software. It's called a stop loss order. As soon as it hits 99 or gets below it, I'm automatically out. And then I lose exactly what I planned on losing. So I think that's the key. And then the second step, I decide when I'm going to get out if I'm right, which a lot of people also don't do. Right? Stocks going up, they think, you know what, this stock is going to go from 200 to 300. And now it goes to 300. And rather than taking their profit, they're like, greed kicks in. I think it's going to go to 50. I'm going to keep holding. Right? And then it comes right back down again. So it's a roller coaster. And that's because people don't have a plan. So I create a plan like that. And I'm very disciplined in following through my plan. If it hits my target, I take my profit and I get out. If it hits my loss limit, I take my loss and I get out. And getting comfortable with taking those small paper cut losses is the key to success.
Yeah, makes sense. And it kind of takes the emotion out of it. So are you pre-setting, is there a way to preset some of that stuff so that you don't have to, get excited by the all of a sudden uptick and think, well, maybe I won't sell at this point?
Yeah. So on your software, all the softwares these days have what's known as a stop loss order, right? Or a stop market order. So I put that for all of my loss limits. So that's automatically in there. If it goes down to that level, there's no emotion involved. It's automatically going to exit the position. Same way for my target, I put a limit order. Okay, if it goes to 300, sell my shares, take my profit. So then I put my stop loss, I put my limit. Now what we've created is a bracket, right? We bought the stock here, and now we bracketed the order. If it goes up, it gets me out. If it goes down, it gets me out. And in between, if it's chopping around, I don't need to worry about it. I got my target in, I got my stop loss in. I don't micromanage it. I let them either stop me out or let them hit my target.
Yeah, okay. That makes sense. And so, okay, so you do that. And what are some, I guess, maybe some other techniques that you're doing in addition to those two?
Yeah, I think, oftentimes in trading, the success really comes down to not really the strategies or techniques, but your ability to follow that strategy or technique. Because, I've seen people come and go in this business. It's like a revolving door, right? People come, new people come in and go. And the people who stuck around is that they're very emotionally disciplined. They're emotionally strong. When they said they're going to do something, they just do it, right? They don't question themselves. They don't question their plan. So I think that level of discipline to follow through is the crucial thing. Because, I could teach anybody how to trade in a weekend. But now, are you actually going to follow it? Is all on you, right? Is greed going to kick in? Is the fear going to kick in? I think managing those emotional states are what's going to enable you to even follow the basic strategies. So I think that's the key to success is like good psychology backed by good risk and money management, right? I think that's the key.
And so maybe tell us also a little bit, obviously I gave kind of a short bio for you, but give us an idea of like your personal journey when it comes to, the stock trading. And, obviously you started, in the college dorm room and all of that, but give us an idea of, what have you taken your wealth at the beginning and built it up to by utilizing some of these strategies that you talk about?
Yeah, so I think for me, first year of my trading, I didn't make any money, right? I lost money my whole first year, but I was very curious about the process, right? I was curious about, okay, why did it happen? I think I wasn't feeling bad, but again, I think what really helped me was trading in college. You don't have any expenses. You don't have to worry about family to take care of. So you could afford to make all those mistakes, where somebody who has a family now, they got, livelihood to take care of. It's much harder. So I think the earlier you start, the better it is. Or if you're starting later in the years, making sure you have savings and all of that to take care of your initial learning curve. Because most people don't make any money in the first 6 months or so, because it's all about learning curve. So for me, it was more like that. But then once I figured it out, then the progress becomes really quickly. It's like your curve starts really slow like this, right? You lose a little bit of money. And then you figure something out, then you start, breaking even. You're not making anything, you're not losing anything. And then comes a curve when you start making something. Once you just hit that curve, you get to a point where then once you've got it, then it's all about just buying more shares to make more money. So I ended up like hitting that hockey stick curve, which, went straight up. And then I said, okay, how can I use this money wisely, right? Because I can keep trading for a living and it's great. I can do that. I hope to do that for the rest of my life. But let's say something happens to me and I can't do it anymore, right? Then I'm in a screwed position. So I took a lot of the trading profits that I made. I bought real estate from that. I have 11 Airbnb properties that I have. I have, startup companies that I'm an investor in. So trading is a way as a vehicle for me to generate the money. And then I take that money and then I park it and I invest in different ventures. So trading is a way for me to get the money to be able to invest and do all the other things that I want to do.
Yeah. Okay. I think that's obvious. It's smart. It's a great way to be able to just kind of fuel any additional investments that you do. But just having that strategy and knowing how to do it, it's something that you can keep repeating over and over again.
Yeah. And people can do that with a job too. You have an income coming in from a job, make sure you take a percentage and park it somewhere so you don't have to work the rest of your life. So a lot of people do it in the stock market. You could do that, right? And don't even pick stocks. Put it in the S&P 500. If you do that, right, typically your money is going to double every 6 to 7 years, right? Assuming a 10% return, which is what the market gives in the long run. Sure, it might have a pullback. Sure, the markets might come down 1 year, but in the long enough time frame, they're always going to go up. Market's always been higher than where it was 10 years ago every single time. So if you just use a long-term approach, and even if you have a job or a business, and even if you don't want to trade, take a percentage, automatically put it in the market. Every 7 years, typically it's going to double, and the compounding is going to, really take care of it over the long enough time frame. So I think people can do the same approach with the job or business too. Some people do it with real estate, some people do it with the markets. Pick your, vehicle and just make sure you are investing though, that you're not always working your time for money and you have some money working for you.
Yeah. I think that's great advice. And so when you're trading, are you doing, obviously, you've kind of given us that you create the stop loss, that you create the limit. And then are you doing mainly traditional like dollar for dollar trade, or are you doing any kind of trading on, I'm going to throw terms out that I'm not 100% clear on, but like on margin, or doing any kind of an option type trade, or how do you typically trade within the market?
Yeah, definitely. So I think for short-term trading, we all use margin, right? We use leverage. Most
leverage.
brokers will give you 2-to-1 leverage for overnight. So if you have $100,000 and you want to trade something, you can buy up to $200,000 worth of position, right? Now, the reason we're able to use margin successfully is because, as what we described earlier, we have a stop loss. So even though we are using a large capital, we're only going to lose what we planned on losing anyway, right? So the margin is just a way for us to take a bigger position size, but we're still going to lose the same amount. What mistake that people make with margin is they don't have the exit points defined, right? So now if the stock goes down, they could lose a whole lot more money than what they put in. But for us, margin is a great tool because we already have our risk control by way of stop loss, so it's not a big deal for us. But yeah, we use leverage. And for day trading, for short-term trading, you actually get 4-to-1 leverage. Some brokers might even give you 6-to-1 leverage, right? And things like Forex trading, you can get 200-to-1 leverage, right? So I think leverage is great if you know it use it the right way. But yeah, we use leverage. I use options as well, but same thing. I'm not going to just hold on to an option until the expiration comes in or until it goes to zero. I'm trading in and out of the option as well. As the stock goes up, let's say, and if I have a call option, the option is also going to go up. So I'm not just going to hold the option until the expiration date. I'm going to trade the option too, just like a stock, get in and out, have my stop losses and have my targets even for the option. Options are a great tool if you use it the right way. I mean, I use it, I would say these days, 70-80% of my trades would be using options. But you have to realize we're still using the option on that stock. So you still need to know where the stock is going to make money on the option.
Right. No, makes sense. That's interesting. It really is. It's this whole nother world, but it sounds like you're using a lot of the same strategies. So once you've learned it, and you teach people how to do this.
Yeah. We teach it through our courses, live events, and I personally do it live every single day on live stream. So every single day of my trading since 2015 is live streamed online. And the reason I do that for a variety of reasons. Number one, I know that a lot of people, you can learn by taking courses and stuff, but there's no substitute than watching somebody do it. Because it's one thing to learn a course, but the other thing to watch somebody actually do what they've just taught you. So I do it live every single day. Win or lose, people get to see it in real time, right? I live stream myself trading, audio, video, webcam. You can see my screen. So win or lose, you get to see it in real time. And I think that's the best way to learn as a trader, because it's great if you see me winning, but I think it's better when you see me losing sometimes, because then you see how I handle myself. I'm not revenge trading, or I'm not being emotional. I'm not going on tilt, as they say on poker. I'm still just following the process every single time. And I think that's the best learning anybody can ever get. And then also, I think it makes me a better trader too, because I'm like, oh, thousands of people are watching me. I better have my stuff together, right? So it actually has helped me become a better trader over time. And I've been doing that for the last like 10 years, live streaming every single day.
Wow. Yeah, that's interesting. I guess at some point it kind of comes just, like this, like what you do, it's just like, okay, we do our podcast, we talk with people, and always find it interesting. The first couple, I can imagine, I used to be so nervous about jumping on and, oh gosh, what am I going to say? Are we going to be able to do this, do that? But I guess, once you've been doing it a little while, it's sort of second nature. That's neat though. Talk about just really kind of transparency and really being able to see what you're doing. So that's pretty cool.
That's why we call the company LiveTraders, is because we're trading live, right? Win or lose, you'll see it. There's no, me hiding behind account and talking about how much money I made, because that's what a lot of people in the industry do, right? Especially people who are in the courses business, right? Like, they're just promoting all the good stuff. But trading is much more than that. And sometimes you can have bad days. And I think it's much more important to see that side of business. And that's why we called it LiveTraders. It's like, win or lose, I'll be doing it live, and you'll get to see everything in real time.
Okay. And there's no restrictions clearly there's not. I'm just, about, hey, we're going to be going into this, or are you allowed to talk about the trades before you do them, or how are there regulations that kind of prevent you from doing certain things live?
Yeah, definitely. So we're not like, I'm not giving any financial advice. I'm not telling, hey, here's a stock you should buy. I'm just doing my thing, right? I'm just doing my own thing. Here's what I'm trading. Here's what I'm buying. Here's what I'm selling. And I'm doing it all live. So I'm just telling people what I'm doing. I'm not telling them you should be buying this, because then you get into the financial investment, advice space, for which you need to be as a registered financial advisor. So I think that's the difference, really. Like, I'm not telling people what to do. I'm just saying, hey, I'm doing this. And I think that's the biggest thing, and just showing people exactly all the positions I hold and I don't hold, so they can see what I have, what I don't have. So the proper disclosures are there.
Yeah. Okay. Have you ever seen, I had somebody randomly throw me into a group on WhatsApp. I didn't subscribe to it, but all of a sudden my phone starts blowing up, and evidently they were buying something, it seemed like it was a stock that somebody was buying. They were kind of like, okay, get in here, get out there. And it was a whole group of people trying to jump in the same one and do these certain things. Have you ever seen any of that, or is that something that you guys do as well? Or
yeah, there's a lot of different groups like that. I always tell people, unless you can watch somebody do it live, I would just take it with a grain of salt, because you don't know the person who's behind this. You don't know their track record. You don't know if they're even real, and you don't even know if that's their own trade. Because I run a newsletter too, right? So where I text people and email them all the trades that I'm taking, but I give them all the information. Here's my stop loss. Here's my target, right? So it's not just I'm buying it here. Okay, now I'm selling it here. Because then it's hard for people to follow along, because they don't know when you're going to get out. I'll pre-tell them, if it breaks this price, we're automatically going to take a loss. If this hits the target, I'm going to take a profit. So then you don't need to wait for me to buy or sell. You know exactly what I'm doing. And then also I track all of the trades in a spreadsheet that all my members have access to. So they can go back in my last 5-6 years and see every single trade I've called and what that result was in. And I think that's the key. I think a lot of people, they would just call the trades and say, hey, look at the winning trade we got. But I'm like, hey, let me see the last 4 years you've been doing this. How is that done? And a lot of people don't have the track record. So I think if you're following somebody, make sure they're legit, make sure they're real, make sure they have a track record, make sure they can show you the track record. That's number one, key as well. And then the other thing is, can they do it live, right? Because I've had instances where people joined my newsletter, right, and they would take everything that I'm doing and run their own newsletter and just send everything I'm sending them. And that happens a lot in the industry too. So I think that's why if somebody's not willing to screen share and come on live with you, then take it with a grain of salt.
Yeah, makes sense. What and you mentioned just kind of obviously just one of many stocks, but what are some stocks that you're following within your and I get it, it's going to change over time, but kind of some of your favorites that seem to hold certain patterns and do these things that are worth at least putting on somebody's watch list.
Yeah, so I think when it comes to short-term day trading, I have a list of 7 stocks that I almost trade, pretty much out of those every single day. And those are we call the Mag 7s, right? Which is the Microsoft, the Meta, the Apple, Google, Amazon, Tesla, and then the ETF for the markets, QQQ, SPY, which is the S&P 500, and the NASDAQ ETFs. So most of my day trades are going to come from this. Now, when it comes to investing, those things change over time based on where the stock is at. Because I could love a stock, but it could be very different at different price points. For example, I might love Tesla at 200, but I might not love it at 500, right? So it's the same stock, but my view changes based on what the price is. Because, you and I could be in the same exact stocks at the same exact time, but our returns will be vastly different based on where we bought them, right?
Yeah.
So, everybody could have different returns. Even though we have the same exact stock in our account, our returns could be vastly different based on where we bought it. So I think that's kind of the thing. So like right now, as we, are doing this podcast, Tesla came down from $470 something down to about 217 or something. So I sold it at 470, but now I'm looking, okay, I think I'm going to buy it back, right? So I think that's something that I'm looking at. I think Tesla, if you get an opportunity anywhere between $180 to $220 a share, I think for the long haul, that's a great investment that I'm getting back in, basically.
Okay, all right, that's cool too. And I guess some of that stuff happens just obviously right now. There's a lot with it seems with Tesla and some of the hate that Elon's getting just for whatever. I don't want to get political on it, but it's like so I'm sure some people are questioning that. So that may make it a little bit more volatile within the next. But I mean, great company and it's done some huge and amazing things. So
yeah, I think going to that point, what you said is amazing, because that's what people do. They trade on emotions, or they trade on what they think. I don't like this person, so I'm not going to buy the stock. Now you're trading on emotion. Now you're trading on feel or your emotion, and emotion should have no place in trading. A stock is a stock. You should be completely objective. You should not love it. You should not hate it, right? It is what it is. So all we're trying to do is trading patterns. So if that stock has a pattern and you hate the company, it doesn't matter. The pattern's going to do what the pattern's going to do. So I think taking yourself and the emotions and your biases out of investing is the number one key. You cannot come to the stock market with like an inherent bias, right? So I think that's one of the things people need to look at. I mean, this happened about a year and a half, 2 years ago when Tesla dropped from $400 to $120. Everybody was like, it's the end of the world. Elon's going crazy. And that was a time to buy. And if you bought it, it went from 120 back to 470, right? And then now it's coming back down because of the similar reasons. But that's what create opportunities for people like me who realize that long run, none of this is going to matter. Short-term volatility is actually a gift for traders like us to be able to pick up stocks on the cheap, so that when people actually want to buy them, then we're like, hey, here you go. Let me sell it to you.
Yeah. Makes sense. Tell us maybe a little bit more about some of the, typically, I'd ask, how people can find out more about you. We can go to that at the end, but more so like, how can people get involved with learning from you? Maybe tell us a little bit about that side of things as well, because you've got this group and maybe there's some others, but tell us about that.
Yeah, I think the best way is I would love to give your listeners a free copy of my book. They can go to go.unmol.net. Once they go to go.unmol.net, they just got to, cover the shipping and whatever the shipping address is, and I'll be happy to ship them a copy. I think that would be the best way to get started with me, because first thing, the book has nothing to do with trading and investing. It's all a mindset psychology book. So I would always tell people to read that first. And if you, like the way I think, or if you agree with my thought process, then we can talk about, working together, because that's the foundation that I live by, that I've written in my book. That's my philosophy. So if you don't agree with it, there's no point in discussing working together. But if you agree with that, then we can discuss more. But LiveTraders.com is the website where we do a lot of the trading, my live streams, the newsletters, the courses. They're all on LiveTraders.com. But I think a book is a great place to start. And they can just grab it for free at go.unmol.net.
Okay. And on LiveTraders.com, is that like a subscription-based deal, or what is that? How does that work?
Yeah, so I think once people make a free account at livetraders.com, they'll get a couple of our courses that are automatically going to be free for them to unlock. And those are the introduction to technicals analysis, introduction to trading. So that's free. They can get started there. And then
Mhm.
everything else on the website is kind of a la carte. Like if you want the live trading room, you want to come in, watch me do it every single day live, be in the chat room with the hundreds of other traders, then that's like a subscription membership, a monthly subscription, cancel anytime kind of a deal. And then the newsletter is the same thing. Newsletter is now geared towards more longer term investors. They're like, hey, I don't want to be in front of my computer doing this every single day, but I'd love to see, okay, what can I buy today? Maybe sell it next week, kind of longer term potential trades. Those are sent in the newsletter. So it's sent via notification on the app. I send you an email, you get a text message every time I'm buying or selling something. So that's in the newsletter. That's also like a membership, monthly membership subscription. And then we have courses that are just, one time you purchase, you have them for life. The online academy where all of the courses we've created are in there. And there's hundreds of hours of training all the way from the basics all the way till advanced. So people can work their way through that. And that's just a one-time purchase.
Okay. All right. Fantastic. And then what about, as far as outlooks, obviously we're kind of in just a different time. I mean, some people are talking, hey, there's going to be a recession. I guess at the end of the day, none of that really matters, does it? When it comes to trading, it's just stocks are going to go up, stocks are going to go down. Are you shorting anything? Is that part of your strategy as well? We talked a little bit about the limits, the stop losses, but how about shorts?
Yeah, I mean, shorts are part of the game too.
Okay.
Because you have to know how to short. As a trader, you need to go both directions. Because if the market's going down and all you could do is buy something, there's going to be periods you're not going to make any money. So the cool part about technical analysis and charts is it's the same chart pattern, just in reverse, right? So it's the same exact thing. So yeah, we do long, we do shorts, but shorts typically are trades only. So we might be in it for maybe a couple days, couple weeks at best. Not holding shorts more than that, because in the long market's eventually going to go up. There's going to be periods where you're shorting, like the last couple of weeks. You're shorting it, then you're buying it back lower, then you're riding it back up. So shorting is a great tool for traders to do because markets, do its thing. But in any market, there's always stocks that are going up and down, right? No matter if the market's going down, there's something that's still going up. So we look at those kind of things and try to pick our technical patterns.
And, kind of as we started our conversation, you were saying, that earnings reports and different things like that, oftentimes, obviously sometimes they'll follow, but like you said, sometimes they'll have a great earnings report and then the stock still goes down, or vice versa. Are you paying attention to any of that stuff as well, or is it mainly just the patterns and whatnot?
Yeah, for me, it's all the patterns because one thing I've realized is once you start looking into the company and stuff, that's when you develop biases and that's
emotions,
when you develop emotions, and then you get involved with the stock. Now you become an investor, right? Now you become a believer. So with technical analysis, it keeps me very objective. I could love a stock today, I could not like it tomorrow, right? I could be very nimble and I can move with the markets rather than just loving a stock. I believe in it. I don't want to get into belief systems because then you might be in a position for like a long term. So I think for me, it's keeping emotions out and just looking at the patterns because, fundamentals only play out in the long enough time frame. But even then, you could be wrong. So if you're going to be wrong anyway, you might as well use technicals that give you an edge on when to get in and when to get out. Whereas a fundamental trader who's investing based on the company, that doesn't give you exit points. Well, you don't know. How do you know when to get out? What's your target? It doesn't tell you that, right? Or when am I wrong? What if investment is wrong? Or you could be in a great stock, but if all it's doing is going down, and what's the point, right? You're going to lose money. So I think for me, it's not about getting involved emotionally with the stock. It's just about, being nimble and moving with the times.
Yeah, for sure. And Anmol, is there anything else that maybe you want to share with the audience that we haven't already talked about with respect to trading, the stock market, your strategies? I try to ask as many questions as are coming to my mind, but I certainly don't want to shortchange the audience if there's something that maybe we didn't get to that you'd like to cover today.
Yeah, I think if people are on the fence that they were looking to get started, I mean, I always tell them, get started, because everybody should be involved in the market. Everybody, no matter in whatever capacity. Now, if you want to do this for a living, you want to do this as a career, then you can do the short-term trading and get involved with that. But if you're somebody who just has another job, has another business, you just don't have the time to do this every single day, you should still be investing in the stock market because your money is losing value every day. The dollar is losing value every day. I mean, a dollar in 1970 is worth like less than 10 cents in today's money. So over time, you're losing purchasing power. People think if they keep the money in the bank account, it's safe, it's earning 4%. But if inflation's at 7%, you make it 4%, you're still losing 3% every single year. And 3% over a long enough time frame adds up a lot because compounding is now going against you. So even if you can invest in the market and get your 10%, now you're 6% ahead or 3% ahead of inflation, your money's going to compound and grow for you. So if you put in, let's say, $1 or whatever, I mean, your money's going to double every 7 years. So you cannot afford not to invest. Everybody should be investing. The biggest mistake they make is never investing. And if you think it's too late, it's not. Like the best time to invest was, yesterday. The next best time is today because the markets. I mean, think about it. Let's say the people think, but markets are going to crash. Economy is doing this. Let's say, assume markets crash. Next 2 years we crash. But where do you think the market is going to be in 10 years from now? Well, right. Is it going to be 20 years from now? Well, the most reasonable answer is higher. So the most reasonable answer is higher. Then why are we not investing in it today? Right? Forget about what's going to happen next 2 years if you're investing in it for the long haul. And I think that's what people need to really focus on, and make sure they are investing.
Yeah, for sure. It's a great point. And yeah, like we kind of mentioned before, I mean, at the end of the day, if there is that volatility, it ends up being a good thing. And if anything, it allows you that once in a lifetime opportunity to get in at the lows and ride them up. So, but doing it like Anmol with your limits and your stop losses, of course.
Right. Yeah. And I think chart reading is the key to that because you don't want to just arbitrarily pick a stop loss. It needs to be based on like a level on a chart. So I think chart reading is key, and it's not that hard. It might look like a new language. It's almost like, if I start learning Russian today and somebody speaks to me in Russian, I'm going to not understand it. It's a completely new language. Same thing with trading. When you come into it, it might feel like it's a new language. I don't understand all of it, but it's actually not that hard. Like in a weekend, you can learn the basics of chart reading, and then you can get to a level where you don't even have to be proficient like me, knowing every single detail, but you'll be able to spot the trends in the charts and the patterns. And I think that it's freely available online. I mean, tradingview.com, I think is a free software. Unless you want to do short-term trading, then you got to pay for it. But all those information is available for people online. And I think, that's where I would point them to is maybe go to LiveTraders.com, start with the basic intro course, which is already free in your dashboard. Start there. And think that 2-hour video will teach you more than you could have learned in any YouTube video.
Awesome. Okay. One other question. I know just in kind of preparing for this, I've seen you at least talk about Bitcoin. Tell me a little bit about, are you looking at and investing in any of that and kind of get your thoughts on it?
Yeah, so I personally have never been a fan of Bitcoin. That's just my personal opinion. Obviously, the market disagrees with my opinion, right? But I do like crypto as a whole. I do think cryptocurrency is the future. I do believe blockchain is the future, especially now with AI and all of that. It's going to need to incorporate a level of blockchain. So for me, I look at crypto not as a currency, but like as a technology, right? What can actually be used to power the financial systems of the world? Right, Bitcoin nowadays, it's, I think people have realized that, okay, it's never going to be used as a currency, right? It's too slow. It's too expensive. Like if I send you Bitcoin, it might take you 15 to 30 minutes for you to get it. I could Zelle you right now, right? I could PayPal you right now instantly. So there's no benefit of a Bitcoin for a currency, right? It's also expensive. Might cost you $15, $20, $30 as a fees, whereas it's not going to cost you anything on the online platforms. So then we've realized, okay, it's never going to be used as a currency. It has no use, but people are using it as a digital gold, right? As a store of value to park their money that longer term it's going to increase in value because of scarcity. And that's okay. That's the reason you're investing, totally fine. But for me, when I make investments, I'll look at, okay, what can actually be used to power the financial systems of the world, right? And I think that's kind of what I use to make investments. So I invested in a cryptocurrency. It's called Algorand, ALGO. The reason I like that is because it's meeting the promise of blockchain, right? What was the promise of blockchain? It's decentralization. It's going to be fast transactions, slow speeds. It's going to power the financial systems of the world. And that's what's happening in at least this cryptocurrency, I think, which is quite ignored because a a lot of people did their research on cryptocurrencies back in 2015, 2016, when Bitcoin, Ethereum, all these things came out, and people haven't kept up with the new technologies that are coming up. And this one only came into picture in 2019, 2020. And I think people haven't, it's kind of under the radar in that opinion. But also because, what can actually be used? So right now, there's a website called lofty.ai, which has real estate. And it's all tokenized on the Algorand blockchain. So people can, invest in properties in tokens. So you don't have to buy the whole property. You can buy tokens in this property, tokens in that property, and you're actually an ownership in that. So the property generates rental income. You get rent paid to you daily in blockchain. You don't have to wait till the end of the month. Whatever your proportionate rent is, you get deposited into your account instantly every single day. So I think that's the promise of blockchain, right? It's cutting out the middlemen, decentralized. Properties are for sale. You can invest in it. You get paid the rent, and there's no counter or third-party risk. There's no like somebody didn't pay me the rent. It's automatic blockchain. So there's no person who can take that away. So that's happening. Then airline tickets are now tokenized on Algorand blockchain, meaning if you can't travel right now, right, you have to call the airline. You have to cancel your ticket, right? You have to change your ticket. That's the current solution. Now with this company called TravelX, they've made airline tickets into NFTs. So if you can't travel, Keith, you can transfer me your ticket as an NFT and the name gets swapped over to me, right?
Really?
Yeah. And I have a secondary marketplace now. People are selling their airline tickets and buying in airline tickets, and it's all automatic. So that is the technology that I want to see. That's what blockchain was meant to do, right? I think those are the things that I'm looking at personally, because I look at it, as I said, as a technology. So who was the first one in social media? AOL, Yahoo, they were the first ones that started it all. Great technology, but then what happened? Faster and better technology came, and now MySpace doesn't exist. Yahoo, AOL, none of those exist. And now we have Google, we have Facebook, we have all these things. So I think the same thing is going to happen in the cryptocurrency landscape. Sure, Bitcoin was the first one, started it all, but now there's way better, faster technology that's eventually going to take place and actually be used. So I think, that's kind of my thesis on blockchain, is looking at it as a technology, not as a currency.
Yeah, very interesting. Yeah, we could have done a whole episode just on that. So awesome. Fantastic. Well, Anmol, this has been really a great episode, very interesting. And we'll have to have you on again to maybe discuss kind of the blockchain and kind of your thoughts on all of these new technologies. Because like I said, really, we could have spent more time on that. So, but really good stuff. Anything else you want to let the audience know as far as how they can find out more about you? And then I've got two more questions for you.
Sure. I think, I'm the most active on Instagram and X on Twitter. My username is same on both of them. It's Delta90, DELTA90NETY. So 90 is spelled out, Delta90. Had it a long, long time ago, never changed the username. So now I'm stuck with it. That's my username, Delta90. I was like 19 or whatever when I made it. So now here we are. It's Delta90 forever. But that's where you can find me on social media, and obviously on my website, anmol.net or LiveTraders.com.
Great. And then what advice, if any, would you give somebody who's maybe just starting out in their investment journey?
I would say first, take it super slow. Don't try to get rich quick. Don't try to go for the home runs. Focus on learning first, right? Build a plan, as we talked about, right? And an investment plan would look like, okay, if I get money in my account, 10% of that automatically invested in the market. Where are you going to invest it? Are you going to buy the S&P 500? Are you going to buy the NASDAQ? You're going to put it in a basket of stocks, right? So create a plan, take it really slow, focus on learning first, right? I didn't make any money my first year, but I used that first year to learn everything that I could possibly get my hands on. So by the end of year 2, year 3, you could be successful. And now I've been at this 15 years. So I think people need to have a long enough time frame. You have a long enough time frame, your curve is going to slowly look like that and eventually hit a hockey stick point. But a lot of people, they want to get there now, and they end up just dwindling their account and losing all their money. So I think take it slow, focus on learning, build a plan, find a mentor, learn everything you could. Just like I had my own mentors, I learned from people too. And the same thing, you don't want to learn from trial and error. It might take you years to learn from trial and error. You might as well learn from somebody who's already made that mistakes and saved you all the time and money.
Yeah, for sure. Great advice. How about a book recommendation? Doesn't have to be investing related, but it certainly can be something you've read that's been impactful.
Yeah, I mean, I would recommend this book right here. It's called Prepping for Success. Thank
There
you.
you go.
So
Perfect.
no, yeah. So I think because what I did is, the reason I wrote the book is these were notes to myself. These were notes that I wrote to myself on what I need to be doing in my own life to be successful. And it's nothing new. It's a culmination of everything that I've personally read or learned in my journey. But apart from my book, the other one that I recommend is 3 Laws of Performance by Steve Zaffron. Right? It's not an easy read. Right? It's not filled with stories. It's a very detailed book. It's a very thick book. But I think that is some of the principles that I use, in my life. 3 Laws of Performance by Steve Zaffron. Not Zac Efron, the actor, it was Steve Zaffron. And then Mindset by Carol Dweck is a really good one too. Stanford professor Carol Dweck, she wrote a book, Mindset. I think those 2 are kind of my top favorites.
Great. All right. Fantastic. Got 3 recommendations out of you. Perfect. All right. Well, thank you so much. This has been a great episode, and I think we'll call it a show.
Thanks for having me. It was great chatting with you.
Yeah, great chatting with you too.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.